In this video, I want to cover a very powerful indicator that gives highly accurate buy-sell signals. Just make sure you watch this video until the end because I'm going to teach you a trading strategy based on this indicator that is very profitable. To add this amazing indicator to our chart, here we click on indicators and we search stochastic momentum index of money flow index. This one, which is an editor specs indicator and written by someone named Andre007. Alright, this is the indicator. And as you can see, it is added here below the chart. It's actually an oscillator, and you can see that we have different lines and a histogram that are moving above and below the center line, which is set at 0. This indicator is built based on two powerful indicators: stochastic momentum index SMI, which is a famous indicator for measuring momentum, and money flow index MFI, which is a very popular indicator for measuring buying and selling pressure based on money flow in the market. In this indicator, money flow index is used as an input for stochastic momentum index, which means that here stochastic momentum index is measuring momentum based on buying and selling pressure that is derived from money flow index. This means that volume also plays a role in this indicator rather than only using the price, and this is the excellent feature of this indicator that made it very powerful and accurate. As you can see, we have different components in this indicator. This line is stochastic momentum index of money flow index, or SMI MFI for short, and this line is signal line, which is actually a moving average of this line SMI MFI with length of 5. The area between the two lines is blue or red depending on their crossovers. When the SMI MFI line crosses above the signal line, it's a bullish signal and the area between the two lines becomes blue, and when it crosses below the signal line, it's a bearish signal and the area between the two lines becomes red. As you can see, not any of these signals are worth of trading, and we can have these types of signals in the pullbacks. So make sure you watch this video until the end because I will teach you how you can take the signals like this one that have higher probability for larger movement of the price. We have also a histogram here in the center of the indicator, which actually shows the momentum changes between the two lines. When the lines are getting closer, you can see that we have smaller bars, and when SMI MFI line crosses the signal line, the bars go to the other side depending on the direction of the crossover. If you have worked with stochastic momentum index, so you know that 40 and minus 40 are important levels, and also in this indicator they are marked by the help of these blue and red dashed lines at 40 and minus 40. As you can see, these levels are a kind of overbought or oversold levels. When SMI MFI line crosses above minus 40, it's a buy signal, and when it crosses below 40, it's a sell signal. Similarly here, not every signal is worth of trading, and they can also happen in the pullbacks. As you can see, one excellent feature of this indicator is that we have also dynamic lines, this white and red lines here, that depending on the volatility and condition of the market, they change their levels. So instead of using fixed levels at 40 and minus 40, you can use these dynamic lines. This depends on your trading strategy and also the market that you're trading. For example, in volatile market, it makes more sense to use these dynamic levels since they are adapted to current condition of the market, but in less volatile condition of the market, these fixed levels at 40 and minus 40 work perfectly well. Alright, now let me teach you how you can take the signals that have higher probability for larger movements of the price. Most of false signals happen during pullbacks or when the price is in a trading range and moving flat. So if we can add another indicator that can help us to know when the market is trending and when the market is not trending, we can take the signals that are in the same direction with the trend and not taking signals when it's a pullback or when the market is not trending. For this purpose, here we click on indicators and we search Andean oscillator, this one, which is an editor specs indicator and written by Alex Grover. This indicator can effectively help us with trending and non-trending market. When the green line is above the orange line, the price is advancing in an uptrend, and when the red line is above the orange line, like here in this part, the price is declining in a downtrend, and when the orange line is above the other two, like this part or this part here, it shows that the market is not trending. Alright, let me show how you can trade based on this setup. When the orange line is above the other two, we don't take any signal. When the green line is above the orange line, we only take buy signals, and when the red line is above the orange line, we only take sell signals. The signals that we take from this indicator are when SMI MFI line goes above 40 or below minus 40 and then crosses the signal line and the area between the two lines changes color. When it goes below minus 40, like here in this part, and then it crosses above the signal line, this is a buy signal. And when it goes above 40 and then crosses below the signal line, this is a sell signal. The sell signal here is rejected because you can see that in Andean oscillator, the green line is above the orange line. For a sell signal to be confirmed, the red line should be above the orange line. Since the green line is above the orange line, we should focus on buy signals. This buy signal here is confirmed because the green line is above the orange line. So we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low and profit target at 1.5 risk to reward ratio. After this signal, we have another confirmed signal here at this point where we got a buy signal from this indicator, and in Andean oscillator the green line is above the orange line. So in practice we could enter another long position at this point when this new candle was opened. The stop loss below the previous swing low, and this is also a profitable trade, as you can see, reaching to the expected target of 1.5 for the risk to reward ratio. Alright, you can clearly see that all of our signals here during this range market are rejected by the help of Andean oscillator, either by having orange line above the other two like this part, or in another situation not supporting the signals like for this sell signal which we have green line above the orange line, or for this buy signal here which we have red line above the orange line. From here the market is turning down and the Andean oscillator is also showing downtrend because the red line is above the orange line, both of them well above the green line. So we know that we should focus on sell signals like this one here, which is a confirmed signal because the red line is above the orange line. So in practice we could enter a short position at this point when this new candle was opened, and this is also a profitable trade where the price declined down to this point. But after this trade you can see that the market again went to a trading range. The Andean oscillator is also confirming this. We have the orange line above the other two up to this point, and all these sell signals are rejected by the help of Andean oscillator, and you can see that none of them is profitable because the market is in a trading range, and after that the price turned to an uptrend. And this buy signal here is also rejected, which in practice was a false signal because you can see that the price declined down to this point, hitting our stop loss. And you can see that this setup is performing very well in rejecting false signals and taking the signals that have higher probability of giving the expected result. But please pay attention that although this indicator is very powerful and this setup helps you to find perfect trading opportunities in the market, but it doesn't mean you will not encounter false signals. This is not possible, and losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because without a proper risk management strategy you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.